Chamath Palihapitiya, through his firm Social Capital, is unquestionably one of the finest investors of our time, with an annual return of above 30% since 2011. As a result, he is being dubbed as our generation's Warren Buffett, or the Warren Buffett of technology. Chamath describes himself as a Buffett disciple. Chamath, on the other hand, wants to take his investing to the next level and is developing what he refers to as Berkshire Hathaway 2.0. In this video, I'll go over Chamath's one-of-a-kind strategy for executing our generation's Berkshire Hathaway, which he believes would provide a consistent return of 20 to 30% every year. But first, if this is your first visit to our Smart Stocks Academy channel, please accept my warmest greetings. Hit the like button, subscribe, and click the notification bell next to it to be the first to know when a new video like this is released. So if you're ready, let's get to the video. Chamath is a personal favorite of mine, and I've listened to many of his interviews. He explained his motivation for constructing his own version of Berkshire Hathaway in a recent podcast with Capital Allocators. He feels that money equals power in our culture, and that individuals with money may push their own viewpoint onto the world. This can be observed in the most basic form when people devote their own money to projects they believe in. Because we all have distinct biases, not everyone will donate to the same charity. Some people place a higher priority on certain issues or policies than others because they believe they are important. Chamath has more than enough wealth thanks to his several successful investments that have yielded large returns, allowing him to expand rather than only focus on rapidly raising his capital. Now he wants to be able to utilize his own money to influence society in order to accelerate his own worldview, similar to what Warren Buffett has done with Berkshire Hathaway.
I wanted to build Berkshire 2.0, and that was always my ambition. And the problem with wanting to build Berkshire 2.0 is many people don't respect capital allocation. They don't think it's a skill. And many people think it's not doing anything. And when Warren Buffett describes his job every day as reading and thinking, I think a lot of people think, what a checked out dilettante. How dare he read and think all day? That's not a job. And I just think it's so further from the truth. Because in many ways, what Buffett was able to do, and this is me imposing my own narrative now, looking backwards, but he was able to use capital to accelerate his worldview. And a lot of his worldview was around American exceptionalism and American GDP, and the belief in the American consumer and the American economy. And so whether that's Precision Cast Parts or BNSF or Geico or See's Candy, he's done incredible things to move the American economic engine forward. He was voting with his dollars around businesses and ideas that were really critical parts of the American infrastructure for American middle-class success. I would like to reimagine what that means for the next 50 years. So from 2020 to 2070, how would I answer my version of that? How can I use my capital, compound book value in a way that accelerates my version of what ideas are really critical, what American exceptionalism should mean, how I close the inequality gap, how I drive a renaissance in the American middle class. And that requires deep, profound thinking and controlling and owning very critical future resources that are poorly misunderstood today, finding the secrets hiding in plain sight every day, and then putting money against that.
Chamath sees Warren Buffett as using his Berkshire capital in the same way that Buffett has done for the previous 50 years, and he intends to do the same for the next 50 years. It is fascinating that Chamath is so forward-thinking with his capital allocation that he is prepared to put his money into something that could not even turn out. For the rest of his life, Chamath could easily sit back and receive money from his current investments. He has been embracing the idea of taking risks and working on something he truly believes for the most of his career. He aspires to build Berkshire 2.0 in a very unique way. Throughout it all, Chamath, like Buffett, remains a firm believer in the long-term value of investing for profit businesses.
All of my money is going to get compounded in for-profit businesses where I can aggregate human capital, social capital, political capital, intellectual capital to solve problems. And that's going to drive book value.
This leads us to Chamath's great goal for social capital, which is to transform it into an economic engine that compounds book value in a predictable manner. He divides it into three main sections. 1. Private investments. 2. Public investments. And 3. Experimental bets. Now we'll look into what Chamath means by these divisions in greater detail. Chamath's first division is private investments. This encompasses both minority investments and the purchase of a share in private enterprises, as well as majority investments and the outright purchase of companies. Chamath claims that he has done this successfully for the past decade, with an annual return of 40%, and that he believes he will be able to maintain it in the future. Companies that are monopolistic and have data center assets, which he believes will be a crucial resource in the future, are key elements that have served them well. Chamath will continue to make 1 to 2 private investments per year that are first unclear to others. He has devoted his entire career to one area: private investments, and he has no intention of slowing down anytime soon. In the world of finance, what Chamath is doing in this branch is relatively new and unheard of. Chamath, as we all know, is a huge supporter of SPACs, or Special Purpose Acquisition Companies. As we can see with Virgin Galactic, Open Door, and Clover Health, Chamath put his personal money into bringing private enterprises public. We will undoubtedly see more of this in the coming years. In fact, he intends to do so with biotech businesses in the future. He's also considering developing complete exchange-traded funds, or ETFs, for the general public to invest in. This is all because he believes in allowing regular investors to invest in companies that are traditionally private. Chamath believes that this will assist the company since it will have more access to finance and investors will be able to profit from return of investments. His main motivation for starting this branch was to figure out how to maximize the ability to generate social capital at a rate of 20 to 30% book value every year, and the technique he's adopting is certainly unique. Chamath launched his Emerging Managers program with a tweet in November. This was an attempt to recruit investors with a non-traditional investment background to the social capital team. We can see from this tweet that Chamath wants to start with US equities, but eventually wants to expand into other markets such as global public equities, crypto, and even trading cards and sneakers. This may appear to be extremely risky at first, because no one in the investing world has ever done anything like it. However, returning to what Chamath believes about Warren Buffett, he feels that by speeding his own worldview with his cash, he is also accelerating his own prejudices. This might mean anything from refusing to invest in IPOs to outright refusing to eat sushi. Investors, like everyone else, have biases, which imply that some investors will spot possibilities where others don't, and vice versa. Chamath is confident that by adapting new ideas, he will be able to uncover investments that traditional asset managers won't be able to find. In fact, he claims that he would rather have $500 billion managed by 500 people than a tiny group of 3. This investment philosophy differs significantly from what Warren Buffett and Charlie Munger have promoted throughout their time at the Berkshire Hathaway. Because the people who manage Chamath's money will be investing in a variety of companies with varying attitudes, he will be taking a tremendous diversification approach. That concludes Chamath's big plan to build Berkshire Hathaway 2.0. What are your thoughts on his strategy, particularly his Rising Managers program? I'm quite interested to see how things will turn out. And with that, today's video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, don't forget to subscribe to the channel by clicking the subscribe button below and turn on the notification bell right next to it to be the first to know when a new video is posted. Thank you for taking the time to watch, and we hope you had a great time. We hope to see you again soon.